Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the MarketSite, we have Kevin Mahn. He's the Chief Investment Officer at the SmartTrust Unit Investment Trust, and we are going to focus on how diversification is working in 2019. Kevin, it's great to have you back with me.
Pleasure to be here.
In Times Square, as always, let's talk about this. Diversification is working in 2019 despite a somewhat slowing global growth environment.
Yeah, it's hard to say what's not working thus far in 2019. We had the best month for the stock market since 2015 and the best January in over 30 years. However, Jill, what's most interesting to me is that those sectors, those geographies, those asset classes that were most beat up in the fourth quarter are off to the best start in 2019. Energy, industrials on the sector side, small cap in the market cap side, and of course emerging markets on the geography side.
Right, which is really interesting because some of the data that we're looking at, global growth is slowing.
Yes.
Although, when you talk about the threat of recession, that seems to be pushed off to 2020 for the most part now.
Yes, the theme for 2019 at SmartTrust is slowing but growing. And we think if the Fed does become more dovish, as they suggested that they will, if the consumer stays confident in spending, as it seems they did at least during the fourth quarter, we think that's a constructive environment for stocks. But you're going to have to pick the right sectors, asset classes, and geography.
Which is really interesting because we haven't had that kind of environment for a while. I mean, 2017, certainly everything was moving higher. Didn't get that volatility until 2018, but now it seems as if there's some good spots to pick and choose for managers.
Absolutely, and I don't think the days of volatility are behind us just yet. Hopefully we'll receive some form of positive news on the U.S.-China trade talks this month, ahead of that March 1st deadline. That could lift emerging market stocks overall. We're very bullish on e-commerce right now and companies that sit within that e-commerce ecosystem. We saw the earnings report from Amazon, which represented a very strong holiday shopping season. We think that carries through into 2019, but we don't see the economy really starting to slow until 2020.
Right, and you had also said that M&A was going to be a key theme for 2019 as well, and we've certainly seen that with the healthcare deals that have rolled out.
Yeah, I mean, just in the last 5-6, we've seen the acquisitions of Tesaro, Celgene, and Loxo. We think there's going to be more of that ahead. I don't know which is the next big pharmaceuticals that's going to jump into that pool, but we do see M&A activity in the biotech front continuing.
Do you see anything outside of healthcare?
Yeah, in the small cap space, I think those disruptive technology companies, the AI companies, are certainly where their multiples, where they're trading right now, could be attractive as well.
All right, Kevin, thank you, as always, for joining us at MarketSite.
My pleasure.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.